What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 2nd of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we're not only going to be diving into taking a look at the major players in the market, such as Bitcoin and Ethereum and the broader altcoin market, but we've got to talk about the central topic that is starting to slowly but steadily really pick up pace, and that is the talk of central bank digital currencies and why they should no longer be ignored by everyday participants in the cryptocurrency space. We're going to be talking about all this and more right after our quick sponsor. And our sponsor for today's episode is Ledn.io. For those of you out there holding digital assets long-term like myself, why not put them to work? Ledn.io offers a wide range of different cryptocurrency-related services. Their Bitcoin and USD savings accounts let you earn the best risk-adjusted rates on your cryptocurrency assets. Their Bitcoin-backed loan program lets you avoid a taxable event while also being able to take a stablecoin or dollar loan off of your Bitcoin. And their B2X program allows you to double your exposure to your underlying Bitcoin. Check out the link down below in the description to get a 250,000 Satoshi bonus and start putting your assets to work today. Alrighty, everyone, I hope you're all having a fantastic Monday. Let's go ahead and dive straight into it. Taking a look across the board over the last 24 hours, we can see here that the vast majority of cryptocurrencies are no trend scenario here, between 1% to 2% to the upside or downside. We're starting to see a few altcoins kick up here, but again, mainly a few outliers. There's not too much going on right now. If anything, we've been seeing altcoins hold relatively well as Bitcoin has started to correct a bit. Now, I want to go ahead and dive through the TA relatively quickly. There's not too much to talk about except for Bitcoin right now. Bitcoin coming down here over the last 4 hours, coming onto this very critical support line here that we saw where was resistance back here. It would be good if you wanted to make the narrative that Bitcoin was going to 14K or 14.5K here in this kind of like shortwave cycle that we're currently in. You'd want to see this hold. It's looking relatively weak right now. The biggest 4-hour candle of volume since back here on the 31st of October might be enough to break it through. And if we start to set in a lower low, this is our last really significant low here. In that case, it would be spelling some bad news for Bitcoin, where either would want to be in altcoins in the market that might be regaining some of that dominance, or probably back into stablecoins if you were like a short-term trader. I'm not really planning to do that though. Here as well, Ethereum, another critical currency at a critical moment in price against Bitcoin, already seeing a relatively stark decline here, testing now on support, which is a really, really important level. We saw that it was resistance back here, and it also played a support here. We already saw it fall through here for a short period of time. Luckily, we got a rebound very quickly after. And again, I want to see some follow through on this. My whole goal here for Ethereum, comparative to Bitcoin, is my whole goal here is in this case for Ethereum to outpace Bitcoin. And with DeFi being a smaller cryptocurrency, it's the same principle as silver to gold. You have market to scale, you have the ability to generally outperform. But it's been doing that all the way since back here in September of 2019. However, I want to see this starkly rebound back up, get back up towards this resistance range up here, make support on these points of resistance, and then continue climbing higher into 2021. That would be the general goal here that we'd be looking for. And last but not least, to talk about kind of the TA side of things, there's really no specific altcoin to really focus in on, but the major thing you want to focus in on is holding here on this point of previous resistance. This was very clear resistance here, around 36.5% here. And you can see here there was resistance here in multiple days. It was, multiple weeks. It was holding here, and then we popped off on the second wave of this cycle that we've been on since back here in September 2019. So we've corrected a lot of those gains of the second wave. We're hanging on that point of support. That is where we want to get interested and optimistic on altcoins. But again, we're going to be watching here more than anything on the daily chart for us to set in a set of higher lows and higher highs in that case. We'd want to see that first to see that dominance is starting to gain an actual trend reversal here versus just, it's up for the day for the first time in a while, right? So anyways, let's go ahead and talk about this topic, guys. I want to really focus in on this, and I want to kind of get past, I think, a lot of people instantly when they hear about central bank digital currencies, they click off, right? And I really want you guys to stay tuned because this is a really critical topic to understand. In most cases, I get it. I get the thesis overall that most people will want to kind of turn off when they hear the conversation because they're invested in Bitcoin, they're invested in Ethereum. Central bank digital currencies, don't have the volatility or price growth, room for growth in that case. So as an investment, they don't make sense. completely understand that, and I'm in the same boat. And along with that as well, a lot of people don't like central bank digital currencies because they may remove some of the autonomy or the privacy or just generally kind of the censorship resistance of traditional currencies. I think this is kind of up in the air for debate because some central bank digital currencies are taking serious approaches to making it mimic cash, basically, but putting it into a digital format. Again, that's a topic for debate. I'm not really here to debate those things, though. What I'm here to talk about is why central bank digital currencies are not only fast moving, but why they can actually be very beneficial for the growth of digital assets like Bitcoin and Ethereum and the broader cryptocurrency space. It isn't likely going to be trying to, and I don't think we've seen the Federal Reserve, the ECB, these central banks, as much as many of us don't trust them in their efforts at the end of the day, because I just think central planning of monetary policy tends not to work much like most central planning in the world. I digress. The major point here is that they will be able to serve as a complement in many ways, and it's through the method of on-ramps. So let's go ahead and talk about that. We can see here, just going ahead and taking a look at some of the major announcements just over this weekend here, really over the last few days. We've had the RBA, the Reserve Bank of Australia, basically Australia's central bank, coming out and stating that they're partnering with Commonwealth Bank, National Australia Bank, Perpetual, and Consensus Software to explore the potential use and implications of a wholesale form of central bank digital currency, or CBDC, using distributed ledger technology. Now, this is really exciting stuff. We haven't heard too much from Australia. In fact, if anything, we've heard a relatively negative tone overall in regards to the issuance of some form of retail central bank digital currency. And when you hear retail CBDC or retail central bank digital currency, it literally means a new form of digital representation of a dollar issued directly by the central bank themselves through possibly an app that's issued by the central bank. So basically being able to have your own commercial bank or payments application equivalent for a central bank. So central banks almost circumventing, in this case, the traditional banking sector and providing a form of digital cash that you can send, similar to Venmo or maybe a cash sending app like Cash App. There's so many others. There's also, I'm blanking on the name right now. It's Zelle. Zelle, that's what it is. See, this is what happens, guys. I'm not drinking coffee in the mornings anymore, so you have to give me a little bit of time sometimes. Anyways, along with that as well, we've got Christine Lagarde, who is the head of the ECB and previously at the IMF, coming out with an official statement stating we started exploring the possibilities of launching a digital euro. As Europeans are increasingly turning to digital in the ways that they spend, save, and invest, we should be prepared to issue a digital euro if needed. I'm also keen to hear your views on it. I'm interested to talk to Christine Lagarde about that, so if you guys would like her to come on the show, reach out to her and let her know. Data Dash would like to talk to her, because I think that there is a lot of discussion to be had. The problem is that central banks, as much as they've claimed they want more kind of transparency around this, they've been kind of like behind the scenes around it. But they've basically opened up a public consultation here to not only pull back feedback from people, but also basically signify that they're pursuing this and they're pursuing it relatively quickly. The problem is that in a lot of these countries, whether it be Australia or through European countries under the ECB, it's a bit difficult to actually nail a central bank digital currency right, because there are a lot of problems that are incurring when you're using ECB, or not just the ECB, but general central bank digital currencies. But along with that, there's a lot of people who are going to have a hard time getting sold on the idea of switching off of cash. But all in all, what could this really serve as a benefit for here? What is this really signaling here in the long term? One thing that we've talked a lot about, and we talked recently about in the Dash report, which we have here on the channel, was the stablecoin surge that's been going on in cryptocurrency markets. And a lot of people don't see the similarities, or at least the kind of similar path that the stablecoin trend has showcased for a potential room or market opportunity for central bank digital currencies. And we've talked about this a lot, not just here on the channel, but also in the Dash report. This idea where central bank digital currencies, much like USDC issued by Coinbase, could be a major on-ramp into the cryptocurrency space, a major net benefit for Bitcoin, Ethereum, and so many other assets alike. Because when these central bank digital currencies become digital, it is going to allow for a framework where, just like how I can hand cash to you, I will be able to use my dollars as I please. And I'm going to have the ability in this case to transmit value much like I can with cash. I'm not limited by my bank or payment processors like PayPal in this case. I'm going to have the net ability to probably exchange with much more people than I would be traditionally with a commercial bank, who might try to stifle competition, who might try to censor you for making payments to people you might want, or certain kind of companies or applications. And this is something as well that's important to note, that when Christine Lagarde talks the way she does, and I recommend you watch the video, it's literally 30 seconds, Raoul Pal put a really good tweet out on some of the language she used, calling it central bank money, saying that it's something that people can rely upon. Speaking to the fact that people, especially in the EU, are losing trust, or more specifically in the Eurozone, are losing trust in the banking sector. And the same is probably coming true here in the United States sooner or later. I think people have just kind of tolerated the banking sector. It's coming extremely fast, guys. And the reason people see a sense of urgency, central banks used to kind of brush this off. It was a talking point back in 2015 through the BIS, or the Bank of International Settlements. It is now steadfast due to the People's Bank of China, or just China generally, in their efforts towards leading forward in developing a digital yuan. And they've had pretty high levels of success and retention with it. They've been able to get over nearly $300 million in volume, and doing over, I think, in this case, 4 million transactions between the small test groups they've issued it in certain select areas. So this is huge. I mean, China natively already knows about using digital currencies or digital payment applications more than any country in the world on a per population basis. But at the same time, this is showcasing that China is steadfast in the race of whatever potential could come about in a central bank digital currency. And we already know that the Fed, though they're taking a slower approach to make sure they get things done right, the Fed is already pursuing a Fed coin or a Federal Reserve issued digital currency. So again, there's nothing crazy in the sense of the speculative investment narrative. We get that already. It's going to be $1, right? It's not even going to be something like Libra that tries to kind of change the game on building a stable asset. No, what this is going to be is a race of the central banks. They do not always just work together, guys. The BIS, as I've talked about before on this channel, is a conglomerative effort, a almost kind of watchdog to keep central banks in check and to keep a general structure on the global economy through Basel I, Basel II, Basel III, and continuing on, to build structure in the world of central banks, because much like commercial banks, they have the interest of getting their currency out there. They have the interest of staying ahead of the competition. So this is going to be a very, very exciting race, and I'm interested to see how central bank digital currencies are going to play out long term. But all in all, I have a belief that it is going to be a net benefit for cryptocurrencies. I may be at a camp of a few people who really actually think that this is going to be a massive on-ramp. A liquid dollar that is issued directly by the central banks. It is the ultimate stablecoin. If you're a fan of USDC, if you're a fan of Tether, if you're a fan of any stablecoins and the convenience that they provide, you will most likely be a big fan of central bank digital currencies. Doesn't mean you have to be a fan of them for investing. Doesn't mean it has to be where you park your capital. It's probably a much better form, though, of managing your money than your traditional commercial bank, because it's authorized, and along with this as well, backed by the central banks themselves. So they're the ultimate form of a stablecoin, and you'll probably have a lot more freedom than what you get right now with your commercial bank. And I'm really excited to see if this could really serve as a catalyst moment for crypto. I want to hear from you guys, though. Again, I understand this topic can be a bit controversial. Love to hear from the comments down below. Drop a like on the video, though, if you guys enjoyed this video. It means the world to me. And if you haven't already, consider subscribing and hitting the bell icon. And if you're interested in signing up for the Dash Report, we'll have the link down below in the description where you can read more reports, just like the one that I mentioned here, as well as get news on traditional equity markets, commodities, Forex, and most importantly, our top picks for different markets across the board. We do 3 different market picks for both crypto and equities. So if you're interested in supporting the channel or learning more about that, you can check out the link down below in the description. All right, everyone, that's it for today's video. Thank you all so much for watching. I hope you're having a fantastic day wherever you are, and I'll see you all in the next video. Take care, everyone.